Businesses change the landscape of the country and technology the landscape of businesses. And embracing emerging technologies is the key to powering India's Pragati. We will now have Mr. Puneet Chandok, President India and South Asia Commercial Business, AISPL, Amazon, take us through the panel discussion on emerging businesses and technologies that will power India's Pragati.
Welcome. Thank you so much for being here with us today at Amazon Smbhav. My name is Puneet Chandok and I'm the President for the Commercial Business for AWS India and South Asia, and I'm delighted to be the moderator for this session today. Today we have a terrific panel coming together to talk about emerging businesses and technologies that will power India's Pragati. I can promise you this panel will separate the signal from all the noise around us today on technology for small and medium businesses, and we'll have a conversation on the trends that really matter, ideas to accelerate your business today and move the country forward. Before I dive into the panel introductions, let me warm up this conversation a little bit and talk about the context that we are all now operating in. The pandemic that we've all gone through, and are actually still going through in a way, has become the biggest disruptor to nearly every aspect of business for every industry. I can't imagine any industry that has not been touched today. And this pandemic, in a way, was a dress rehearsal for the new world that we are all entering. A world which is going to be more volatile and uncertain than ever before. This crisis has taught us many things, but the one lesson that stands out for me is the need for agility and the need to rewire our businesses to operate in this new uncertain world. And that's where technology and cloud come in. Cloud reacts well to uncertainty and changes everything when it comes to agility. Everything. And no surprise, technology and cloud today are at the center or at the core of Indian businesses versus just being on the periphery. An analyst recently told me there is no business strategy without a cloud strategy, and I couldn't agree more. And it's not just about building infrastructure on the cloud for agility. We're now seeing technologies such as artificial intelligence, machine learning, IoT, blockchain come to the forefront, reinforcing what digital innovation really means for Indian businesses. With that context, I'm excited to hear from our panelists, and I'm excited to hear from them on what they have to say about technologies that are truly revolutionizing businesses in India and how each of you can capitalize on these technologies for the next wave of growth. So let's welcome our panelists for today. Our first panelist is the CTO and co-founder of Razorpay, Shashank Kumar. Welcome, Shashank. Our second panelist is Ajith Pai, the CEO of Delhivery. Welcome, Ajith. Next, I'd like to welcome Ananth Narayan. Ananth is the founder of Memsa Brands. He's also an ex-colleague and a mentor of mine. We worked together at McKinsey for many, many years together. Welcome, Ananth. And finally, to round up this incredible panel, we have Alok Mittal. Alok is a co-founder and CEO of Indifi. Welcome, Alok. It is such a privilege, it's truly a privilege to have all of you join us today at Smbhav, and I'm thrilled to be your host. With that, let's just jump right into the discussion. I'll structure my questions today in three parts. The first set of questions are framed to understand and learn from the journeys that all of you have had and the incredible growth that all of you have delivered. Second, I'd like to have a discussion on the impact of the pandemic and how all of you have minimized the disruption around your businesses and your customers and actually learned from the pandemic. And finally, I will dial the clock forward and we'll have a conversation about what's next for each of you, for your businesses, for your customers, and what's the role of technology. With that, my first question today is to Shashank. Shashank, Razorpay is one of the juggernauts of the Indian fintech space today. It's growing at an incredible rate, having clocked over 300% year-on-year growth for the last 2 years. Correct me if I'm wrong. What's the secret sauce? What's driving this incredible wave of growth for Razorpay?
I think there are a few things about the company that's given us an edge over the years, right, and kept us focused. I think first is just our ability to just focus on the key segment that we the key customers that we have, which are tech startups and digital SMEs in the country, right? I think over the years we've always there have always been like a lot of distractions coming through in the ecosystem. Sometimes there's noise around wallets, sometimes there is noise around some other trend that is picking up. But I think the thing is trends come and go. There have been times where our investors have also asked us whether you do something around consumer as well. I think we have been very clear that our key demography target customers are the businesses that are growing in the country, the tech startups, which are looking to digitize and looking to grow the economy. And we are just laser focused on serving them and building everything that we can do to support their growth. That's, I think, the biggest aspect, which is our focus. And I think second, I would say, is our DNA of engineering and product first. I think what happens in the financial industry, right? I think is that over the years, like a lot of financial products, a lot of technologies that have been built, right? But every year, every half a decade, technologies keep evolving. Trends keep changing again. There are new ways of money movement that keeps coming up. I think our engineering DNA, our tech first DNA, has allowed us to kept pace with the changing needs of the ecosystem, and has allowed us to be really agile, as you were talking about, right? So we really pride ourselves on the fact that we are pretty much the first company to always launch any innovation in the payment space in the country. We were the first ones to launch a fully digital onboarding journey back in 2014-15, when people were still signing paper documents. We were the first ones to launch UPI acceptance in the country. Right? We were the first ones to support like marketplaces and marketplace disbursements. So there are multiple such things, that I think we're able to claim as being the first ones. But the underlying theme is that, like with the changing environment, with so much flux in the payments ecosystem, you want to be at the top of your game so that the businesses don't need to worry about what is happening in the fintech ecosystem. They just want to worry about how can I take advantage of this new thing to help their customers and to build for their customers. And we are always there to support from an innovation perspective that, hey, we have got your back, right? These are two primary things that I would say has been like something that has allowed us to be on the top of our game.
No, love that, Shashank, and you have been on top of your game, and love the laser sharp focus on customers, product and engineering, and also innovation, right? And ignoring all the noise around you. So thank you for that, Shashank. My next question is to you, Ananth. Memsa Brands too has been growing at an unprecedented pace and became a unicorn in just 6 months after launch. 6 months. That's truly remarkable. And with you leading the charge, Ananth, I'm not surprised a bit, but congratulations to you and the Memsa team. What do you look for in digital-first brands that you are bringing into the Memsa umbrella, Ananth? What are the attributes that convince you that this is the right business for Memsa?
Great. Firstly, Puneet, thank you again for your kind words. But value creation is a lot more important than valuation, in my view. I think. Really, I think the focus is on building digital-first global brands. Here is an interesting statistic. The market for fashion, beauty, and home in the country is a little north of $120 billion. Only 20% of that is branded. And, this was a surprise to me. There are less than 25 brands that are more than $100 million in revenues, online and offline put together, right? So for a country the size of India, I think there's a unique opportunity to build digital first brands in a very tech-led manner. I think that was the opportunity that we really saw and went after. I think the acquisition piece of it is in a way to accelerate the journey and sort of get brands with the right product market fit. There are now north of, you will know these stats better, but there are north of 4,000 brands between 10 and 100 crores in India in these spaces, which are selling primarily online. But all of these brands hit a little bit of a plateau when they get to the 20, 30, 40 crore mark, right? And then they don't grow because the capabilities, the technology, the product, the marketing capability, the operations capability, and the talent that's required, and of course, capital is quite different to go from 50 to 500 crores, right? So we actually just completed 1 year. May 1st was was when we launched last year. So it's exactly been 1 year now. And we have about 24 brands in the portfolio across fashion, beauty, and home, which are growing at an organic rate of 80%, right? And what we look for is actually quite simple. The first and foremost, and something that you can't get around, is customer love, measured both quantitatively and qualitatively. I think either you have it or you don't have it. And I think it's really important. The second actually is founder quality. So ours is a brand building business, a tech-led brand building business. It's not just aggregation. So the founder quality is really important because the founder stays with us for 5 years, even though we own majority, and they actually work very closely with us, right? So we've been very fortunate. We have a terrific set of founders who, would have joined us at a Myntra or a MedLife. So, you choose sort of the great founders. And the third is complementarity. So what are the brands really good at? What's the one moat that they have? It could be sourcing. It could be around identifying new designs. It could be around an ingredient in the case of beauty. But what is it that they have, which is very good? And what's the complementarity that Mensa can bring? So what's the Mensa alpha? And therefore, let's say the brand's growing at 40%, how can we accelerate it to 80 or 120, right? So I think those are the criteria we look for. I think we've been quite fortunate in that, in a very tech-led manner, we've been able to accelerate growth across platforms like Amazon, across D2C, and I would say even offline, which is still a bulk of the market. And I think all three are quite important, and it's sort of a very tech-led way. Otherwise, by the way, if you have 20 brands, it's very hard, or 25 brands, it's very hard to do this in a non-technology way, right? Because then you don't scale, you scale very linearly. So I think that's been the core of the focus. So a very tech-led approach to brand building and growth. And I think that's sort of working for us. It's still very early days, it's year one. So very focused on continuing to build it. And success for us is not valuation. Success for us is in 5 years from now, if there are 10 brands that are household names that we've actually worked very hard with entrepreneurs to create.
Thank you, Ananth. Love the ambition and love the focus on value creation and not valuation. I also loved what you said about customer love. At Amazon, we call this customer obsession, but I think you've taken it a step forward and love the growth, 80% across your brands, and wish you all the best for the next few years. Let me move on to you, Ajith. As the CEO for Delhivery, you've piloted Delhivery through another fantastic year, closing 2021 25% higher than last year, if I'm not wrong, and a turnover of over 3,500 crores. What has led to this sustained growth for Delhivery amidst all of the chaos around us in the sector?
Yeah, so first of all, thanks for having me here. And it's great to be part of this event. Amazon's entry into India was one of the things that helped us along this path. And it's great that you're having this event for a whole lot of the rest of the smaller sellers to benefit from and take the same growth path. At Delhivery, our focus has been pretty much the same since we started. We started with e-commerce logistics because that was the first segment that we saw an opening in. We saw that there was a need for deploying not just the service of logistics on the ground, but also backing it up with the right visibility, the right technology that would give us the visibility, but that would create reliability, and ultimately also serve it efficiently, because logistics, end of the day, is a cost for every single buyer of the service. What has helped us grow over the years, I think, is number one, the intense focus on technology as the driver of value creation, right? What does technology do in logistics? I think the way we think about it is that the two parts of basically what you create as a service. The first thing is the reliability that you provide on the service and the cost at which you provide it. And the second, which is the most important, is basically the visibility of what you do to your client and to your customer, right? The cornerstone of Delhivery's growth has been applying these three principles to every single type of supply chain requirement, whether it is warehousing, whether it is a parcel delivery, whether it is a delivery for, let's say, heavy goods, whether it's a B2B delivery, and now moving on to cross-border services, full truckloads. Pretty much every single service, these three things have been the cornerstone of what we built for. What we realized very early on in the journey is that the hard assets in our business are, while they may seem like they're harder to build in India, I think putting them together is not rocket science. What is rocket science is actually being able to put together the entire technology stack, which allows clients to interact fairly seamlessly with us and with their customers. And that is exactly what we've gone after. The first generation of what we did was largely about putting the tracking technology in place. We then moved on to figuring out how to make it viable across different service lines. And further from there on how to make it scalable. Because the big challenge with the supply chain industry in India had been one of scalability, right? And the scalability was on the tech side, as well as in terms of the infrastructure, and hence ultimately the service that we would provide. I would say that the formula for growth for us has never changed. I do not think that it will ever change in a market as vast and complex as India. I think there will be new things that we will focus on, but I think all of those new things will be towards achieving the same old goals. How do we make the journey for our clients more reliable, completely visible, and as efficient as we can?
Thank you, Ajith. I mean, love the three cornerstones, right? Reliability, transparency, visibility, and then cost efficiency. And staying consistent with those for the long term seems to be the formula, and I'm glad you're sticking to that. Alok, I'll come to you next. Indifi, similar to all the other three amazing growth journeys that we've heard in the past few minutes, Indifi is revolutionizing the marketplace for unsecured loans for SMEs. Tell us, how are you helping customers on their journey to improve financial access in India?
Thank you, Puneet. Indifi was started with the mission to improve convenience and accessibility of credit for small businesses. The notion that 85% of Indian small business entrepreneurs should be denied credit does not sit well with us, and that's really what we are pursuing to change. We have used three different kind of levers to try and solve for this problem. First is to go all in with a digital approach. We don't have any branches. Our credit assessment happens through data models. And what that allows us to do is to create more convenient journeys for customers, given that there is more and more digital trail of data that we can integrate into our algorithms, and hence reduce the overhead that the customer has to bear in getting a credit facility. The second has been to go in and access customers through their natural business ecosystems. Amazon is a very valued partner of ours. We operate across industries, e-commerce, restaurants, retailers, through that same model. And that allows us to serve customers who otherwise will not be given credit. For example, sellers who have only 6 months in business. Normally, the industry requires a 3-year vintage. We can waive those off because we know the affiliation and hence the genuineness of what they are doing. And finally, what we have built is a curated marketplace for lenders from different backgrounds, public sector banks, private sector banks, large NBFCs, smaller ones, to make sure that we can find credit for every applicant. So depending on their risk profile, depending on their bureau profile, we are able to match the right lender for each borrower and hence improve the accessibility. So those have really been kind of the three legs of the stool for us. You mentioned revolutionizing. We are quite early in that journey. We would be privileged to get anywhere near that. And the magnitude of the problem is something that inspires us.
Thank you for that, Alok. Love the mission of, and I think love the discomfort that you have that 85% of Indians don't have access to credit when they need to, and solving that problem through technology is quite inspiring. So thank you for that. Shashank, I'll come back to you. In 2021, in the heat of the pandemic, Razorpay was powering 34 of the 42 startups which had become unicorns. By the way, we've crossed the 100 mark today. But you were powering 34 out of the 42. Now that's an incredible statistic. How does Razorpay keep pace with the innovation needs of these fast-growing companies that you're working with? And how important is the technology stack when it comes to product innovation for you?
I would say, we focus a lot on hiring good people. If you are able to get good people in the team who are very aligned to you in terms of culture, who are very much focused on customers, that does more than half the job, right? Even as the team has expanded, now we have more than 1,000 engineers and product people. I think we have been very focused that we should be true to our culture of innovation, of focus on the customer. And we have designed a lot of rituals to ensure that the team gets to see the end customer problems firsthand, gets to experience what the customer is feeling, gets to understand like what the customer's roadmap looks like and how we can support that, right? So I think just designing all the touch points and rituals to understanding the pain points of the all the customers that we have, all the whether it's large tech enterprises or the upcoming new startups, that keeps us grounded, that keeps us always focused on like, okay, like there's so many things are going on with everyone, but what are things that we should be prioritizing that will have the maximum impact in the ecosystem. And that is how a lot of things came through for us. That is how we went into the neo-banking space or the payroll space. If you just look at payroll, for example, right, it's such a broken experience that every single founder goes through in India, right? Which is calculating all the salaries, figuring out all the compliance payments, then punching in multiple OTPs to finally make the payroll, right? And then liaising with your chartered accountant. I think the simple fact is that there's a lack of good software in the B2B space that can really automate all these processes and make the life of entrepreneurs and finance people and the product managers much simpler, right? So I think just this part around focus on customers is what, again, I'll keep coming back to, is what has allowed us to stay ahead. And the second part I would attribute again is the engineering stack or the tech DNA, right? Payments, fintech is very much an engineering first play, right? Building out the right product with the right technology allows us to move fast, allows us to do things much quicker than what the traditional incumbents or some of the banks might be taking on, right? We try and own a lot of our tech stack and build it from the ground up, and to operate it at scale, right? Even with the speed at which the growth is happening, matters a lot, right? So when we design our products, we usually design it from a 5 to 10 year lens, which is very counterintuitive to how most of the startups work. Usually most of the startups build things for, let's say, like few months to a few years. But when we build things, we think about timeline of 5 or 10 years and thinking like, okay, how will this product support the ecosystem and the market 5 or 10 years down the line? Because we believe that fintech and payments infrastructure and banking infrastructure needs to be built for the long term, and needs to be built with stability, with robustness, because it needs to inspire a lot of trust that the customers are putting on us, right? So yeah, this focus on longevity forces people to build very high quality products, understanding that it's not just something that we are building to throw away. It's something that we are building to ensure that we are around to maintain it and give like top-notch experience and customer support to the tech startups that we are serving.
Well, Shashank, it's uncanny how similar this is to our mental model at Amazon, which is hire builders, truly work backwards from customers to stay grounded on innovation not for the sake of innovation, but truly solving customer problems and then thinking long term. So thank you for that. Ananth, I'll come to you now. The pandemic has impacted all of us. And as I said, not a single business in any industry has been spared. How have you been able to help accelerate value creation, which is what you started talking about, for the companies under the Memsa Brands umbrella during this pandemic, and what role did technology play in that?
Yeah, no, I think great question. So, it's been interesting. I've actually seen the pandemic through two lenses. One is in my midlife days, where it was e-pharmacy, which was the first wave, and then actually at Memsa, where we were born through the pandemic. And I think it's been interesting to see. I would say three big things, at least for me. The first is consumer behavior seems to be fundamentally shifting, right? So I'll give you an example. In Myntra, for example, we used to look at this data which says when a customer comes online, how long does it take for that person to actually make a product transaction, which is somewhat complicated, like fashion, right? Where you have size and fit and all the rest, right? So it's a more complex sort of buy, if you will. And that number used to be in the 12 to 18 month type of range, right? So, from looking at content to buying tickets to eventually buying this. That journey, I think, has now accelerated to sub 6 months, sometimes even sub 3 months. And I think that behavior is there to stay. I also think very different kinds of people are accessing online now than what used to be. So I think the acceleration of the journey on what they do online has changed fundamentally, and who accesses it has also changed fundamentally. So I think that's one big shift that's happened. The second is, I would say, I think technology has been core, Puneet, to, I think, how to solve these problems, right? So whether it's medicine delivery at the MedLife pharmacy thing, or now, if you think about brand building, I think fundamentally a tech-enabled way, both in terms of distribution and reach, and in terms of understanding the consumer journey, and in terms of brand building. All three, I think, are now much, much more tech-driven than I think they were even 5 years ago. Right? Even if I just think about the evolution over the last 5-7 years, and I think that's been very interesting to see, and I think it's irreversible. So that's the second, I think, big implication. I think the third implication, I think you already spoke about, and I think multiple people on the panel have spoken, is agility. I think we have been born in the pandemic. I mean, at some level, it's quite interesting. The first 3 partnerships that we did, and the first 15 people that we hired, I actually never met them physically. I mean, we of course had Ernst & Young go do a physical audit, but it was hours and hours on Zoom, but we actually never went and met because it was right in the middle of this. And so the ways of working have changed fundamentally. I think ability to make quicker decisions, I think continuing to stay with the hybrid. I mean, I'm very, very glad that offices are back now. I think just being online was terrible. But I think it's what it's taught us is, I think, 2 things. One, hybrid models work. Second, I think the talent market has opened up. So if you look at our teams, they're actually quite spread out, not just in India, but globally, because the market's now opened up and you can operate efficiently. And you've figured out that there are different ways of providing apprenticeship, mentorship, and a culture and a fit, right? So I think the ways of working and the agility and decision-making inside companies has changed fundamentally as well. So I would say, so customer journeys changing fundamentally. Second, at least in our context, distribution, branding, and consumer understanding becoming much more tech-led. And 3, just fundamental ways of working inside the company and how you think about talent, how you think about building cultures is gone through a dramatic transformation. And I think all 3, I think, are fundamental shifts, and they're here to stay for the next decade. So it's been very interesting.
No, I'm glad you said that, Ananth. And we all hope that some of these shifts don't snap back to and be it customer adoption trends, be it how we operate as businesses and colleagues. And I hope we don't snap back to the old ways, because the new ways are much faster. They seem to be working. Of course, we have to find a rhythm in this hybrid motion. But thank you for that, Ananth. Continuing in the same vein, I'll come to you, Ajith. In 2019, the McKinsey Global Institute predicted that India's logistics sector would expand at a growth rate of more than 10% to $320 billion by 2025. Unfortunately, the sector that you're in has been impacted most by the pandemic. What steps has Delhivery taken to minimize the disruption caused by the crisis around us? And what are some of the learnings that you're walking out with?
Yeah, I think it is really unfortunate that the economy hasn't grown as much over the last 4 to 5 years as one would have expected. But I think that has been in the face of the circumstances that were truly sort of one of a kind, right? That said, and Ananth referred to it, I think there's a whole lot that has changed in terms of how people transact, about how people work, and I don't see why the lack of growth over the last few years for the sector as a whole should really be a problem, because as the economy starts picking pace, logistics will follow. With the context of the Indian sector, I think there is a different way to look at this, which is that logistics as a cost actually has to go down for businesses so that they can transact more, so that they can figure out more ways of bringing on board customers who probably today are hard to serve. So in a sense, I would say that the right thing for logistics is basically that the economy grows, that the people who sell in the economy, whether they're small sellers, their brands, their businesses, figure out more efficient and more varied ways of actually reaching their customers, and logistics then enables all of that. The other trend, though, which is important to note, is the fact that while while the pandemic hit us in 2020, I think another tectonic shift that happened was GST coming in 2017. And in a sense, I don't think we've seen the positive effects of GST all play out fully as yet. We are still seeing them play out. What GST has done is that suddenly it has now made India into a single market. And this is a very, very critical difference from a perspective of logistics and distribution. What it allows is for the logistics sector to become more efficient, because now you no longer have to think about tax considerations as you frame your network. It allows you to get to the right, let me put, for the lack of a better word, the right mathematical model for a logistics network, considering what comes in and what goes out. I see all of these as being far more positive to the organized sector in logistics and to logistics in general, rather than the fact that the sector did not grow through the 4 years of the pandemic. I think that part of it, to my mind, is just a question of the economy picking up pace. On the other hand, you are already seeing that what the pandemic did was basically to suddenly change ways of thinking across different people. Somebody who probably would have never sold online was forced to think about it. They came online. People who probably never bought online came online. In a sense, it's completely changed that journey. And I don't see how any of this is not positive. Coming to your point around basically what we as Delhivery did through this, I think I will boil it down to a single word. It was agility. We tried to be as agile as we could in adjusting to the new realities. The fact today is that some of what we did may not be relevant in a non-pandemic world, or the pandemic doesn't really need that kind of input anymore. But I think what that agility helped us and helped our clients was basically to continue transacting, right? And as they continued transacting, they sort of transacted their way out of what I would call a dire situation. I think that's really what we did. I mean, I don't think there's any point to discussing the specifics, but I think that was really what we tried doing through the pandemic, and that is what we will try to do across as the world around us changes.
It's heartening to see, Ajit, the positive and the upbeat take you have in this, right? And I think the cornerstone that you spoke about earlier, cost and efficiency, and then making sure that helps you create this flywheel of more and more customers and businesses coming online and helping you scale. And then India as one market is another big disruption, right? So that should play out. Alok, I'll come to you now. Unlike logistics, Indifi, on the other hand, saw a resurgence in credit demand during the pandemic, right? And tell us, what were the key drivers shaping the dynamics between lenders and borrowers as you're building this marketplace? And what alternative sources of financing have helped small and medium businesses and customers of yours emerge out of this crisis stronger?
Yeah. So Puneet, credit is a funny business, right? When the demand is the highest, the risk might also be the highest, right? And the pandemic was a bit of that. I think most small business lending companies, honestly, I think were torn between how hard should they push on collections vis-a-vis what is right for the customer, right? So I think that was the first conflict that most of us faced, especially in the 2020 zone. What helped Indifi, honestly, was we got lucky with one of the choices we had made, which was to lend through ecosystems. And the reason that is important is, that is the only stream of data that continued to flow through the pandemic. And in some sense, it allowed us to personalize collections to individual customers, right? So we understood when a customer was in business, was earning, but didn't want to pay. Vis-a-vis the business was temporarily disrupted, and we needed to, do the right thing by the customer. So I think that was the ability to micro-target, collections effort was central to how we navigated through that. The upside of all of us being stranded at home for a long time was an amazing adoption of digital tools by MSMEs, right? So in the lending business, that corresponded to being able to sign documents electronically, right? When we entered the pandemic, we were at about 30%. Now we clock over 90%. Being able to give repayment mandates electronically, we were at 10, 12%. Now we're at 70%. And what all of this did was to enable new products and new ways to service customers. So last year, for example, we launched the first ever straight-through processing for small business loans on back of these digital enhancements in the customer behavior that was receptive to using these technologies. So I think looking back, in hindsight, the last 2 years, have been a positive. But there was a phase where, really you wanted to make sure that you're doing what's right for the customer, but at the same time, not compromising business survival.
No, thank you, Alok. I mean, it goes back to the point agility, right, which everybody has made in this panel, which is your ability to maneuver this uncertain world and how demand and supply shapes up. So thank you for that. Let's switch gears, folks, to the last part of the conversation, and let's talk about what lies ahead. What's the future? And Ajith, I'll start this round of question with you. The AI platform at Delhivery ingests, assimilates, and learns from over 1 billion system actions, 30 million user addresses, 4 billion vehicle GPS trace points, and 2,700 terabytes of computer vision data. It's incredible to see these numbers. It's amazing to see the scale and diversity of what you all are building. But tell us what's next for you from a technology perspective. What are the big bets that you're taking at Delhivery?
I think that's a very interesting question. I would say the biggest bet that we're taking across not just technology, but across how we do business itself, is in terms of how do we take the technology that we've built and create it into a platform. Now, what do we mean by that? I think what we realize is that logistics and supply chain is such a fundamental industry with so many use cases across the board that one delivery or something like a delivery will never be able to sort of solve all of the different use cases that customers need to use. And at the heart of this will lie the technology on which people that people use. One of the things that we're in the process of doing right now is actually to convert all of the stack that we've built into a set of 3 different layers. The core operating system, think about it like an Android for logistics, right? And then you have communities of developers who can build specific applications on top of it. What Android does, for example, is that it makes the entire ecosystem fairly easy for people to build on top of it, right? That's the direction in which we are going. So effectively, as we build that core operating system, developers can come and create applications on top of it. They may or may not transact through the delivery logistics network, but they may use the operating system. Now, why we believe that is important is because I do not think, like I said, anybody can build out the exact application for every business to benefit from, right? And to the extent that people build these applications themselves, they will solve for a lot of the use cases themselves. Where delivery will benefit from is basically the fact that not just is the core operating system built by us, but also for the use cases that matter, where delivery does provide the service, it will be much easier for clients to transact through us, right? What this also allows, and this brings us back to the point on data that you made, is that a lot of these data applications then become open for people to use. And the idea is that similar to the way an Android was created, similar to the way an AWS was created, how do we create that sort of base layer on top of which people can operate on their own and solve their own problems, right? I think that's one really big bet that we're taking for the future. The other one is basically around the hardware automation. And when I speak about hardware automation, I don't mean in terms of just the drones, the sorters, the AGVs, which we can use inside and outside our facilities, currently inside because of regulations, but eventually outside as well. I think the idea there is to build the technology stack to a point where all of these all of these sort of hardware, all of this hardware can get used with very minimal integration, right? That will actually become critical to our operations, because as operations scale, I think the issue, like I said, will not be in terms of putting the hard assets in place. I think the hard assets can be put in place with a plan. The issue will be in terms of the time and the energy spent on actually integrating. So as we create those sort of integration layers, I think that's the next big bet that we will take. But again, ultimately, all of these bets will center around the same three cornerstones that we spoke about. I don't think that changes at all.
No, Ajith, it's amazing to see the laser sharp focus you have on the three cornerstones. I also love the way you describe the platform, right? Because the platform word gets misused. I keep hearing it all the time, and half the time it doesn't mean much. But love the way you explained it, right? Which is truly building the Android for logistics and then bringing developers on top of this to truly innovate, right? I mean, what used to be your secret sauce is now code for somebody else to build on, right? And it's amazing to see the shift. And Alok, I'll come to you. You're thinking really big as well. And if I'm not wrong, Indifi aims to double your growth in FY23. Tell us, what's the role of technology as you think about your ambition, and not just for next year, but going forward? And how would technology really enable better lending for more small and medium businesses in India?
So Puneet, the way we are looking at deploying technology is to further, our mission that every borrower must find a loan that fits their requirements, right?
Yeah.
And what we have realized is that fundamental constraint in the way the industry is organized today is there are these standardized products, and either the borrower fits that product or the borrower doesn't fit that product. In fact, you will see that within the same bank, different products are carried by different business lines, and hence there might be an applicant to one business line, he'll never get offered the product that is sitting in a different business line within the same entity. Now, what we are doing is we are using technology and analytics to create different credit pathways for different customers, and dynamically changing customer journeys depending on what is the information we have available for the customer, what is the risk profile of the customer, what is the amount of money they need for what use case. And depending on those, we will apply different products, different risk programs, different processes, right? From automated ones to ones those have human oversight, and offer different choices of lenders to make sure that finally every MSME is finding their home in terms of credit. So think of this as a personalized customer journey, making different trade-offs at different points in time, obviously simplifying it for the customer to the extent where they don't really notice the difference. But at the back end, we are able to spot the right supply for each demand.
No, Alok, I like the way you said it, right? And personalized customer journeys and personalized credit journeys, right? Because there is so much inefficiency or need for simplicity in the system. And I always believe the S in SMB stands for simple. And we need simple solutions for them, right? Because currently, I mean, and again, you're talking about credit and financing, I'm talking about technology. Even technology is really complex for small and medium businesses, and we're working very hard to simplify it. A lot more work to do, but thank you for that. Shashank, I'll come back to you. We've already spoken about the incredible growth story for Razorpay, and I think you have plans to achieve 90 billion in total payment volume by the end of 2022, if I'm not wrong. And that is truly thinking big and dreaming big. What will it take to drive this next growth frontier for Razorpay?
Our focus is to, how do we keep increasing commerce on the internet, keep making it seamless, keep making it simple. I like to imagine that, internet is like an open bazaar, right? So we're kind of used to going to physical bazaars, right? And checking out different things and different items. But when you transpose that same experience on internet, when you transport that same experience on internet, there are a lot of things, that are broken today. Not just the payments, but also how do you establish trust with a third-party seller, who's looking to sell and scale over internet to millions of customers in the country, right? How do you provide incentives for digital transaction? How do you ensure a hygiene level of experience, not just on checking out the products, but also the post-delivery experience that is there, right? So we at Razorpay like to think of ourselves as the friends for businesses and for entrepreneurs. So and we just want to ensure that any kind of digital transaction that the business is undertaking, whether it's with their end customers or it's on the back end with their employees, with their vendors, how can we keep removing the friction points from there, right? And whether you are selling, an item or an e-commerce on internet, or you are, just looking to provide tuition or coaching, or you are, just selling, let's say, cupcakes or, food, right? Across these themes, what stands out is that establishing trust, establishing standard, good experiences across a wide range of demography, right? Solving for helping consumers transact digitally. All of these problems are still huge, still tremendous. And as India keeps moving ahead, as our GDP keeps moving ahead, I think these are problems which if we are able to solve, I don't think there'll be any problem in hitting any GMV goals. I don't worry about it too much. Honestly, if our entrepreneurs and our customers are successful, they'll take the economy to multiple of that.
I like that a lot, Shashank, and I think focus on internet as an open bazaar, reduce friction for customers, and growth will happen. You don't have to focus on growth, you have to focus on customers, and growth will come. Ananth, my last question today is for you. In a similar spirit to what Shashank was just talking about, right? I mean, looking at Memsa Brands, you're looking at acquiring over 50 brands across multiple categories over the next few years. And what will it take to keep this growth momentum going, both for Memsa and its brands?
Yeah. No, so in 4 years, I think the goal is to have 100 brands. Hopefully $3 billion in net revenue, and at least 10 of these brands being breakout, right? Which means, they're market leaders in the particular segments that they're in, and north of $150 million in revenue, which, like I said earlier, is very few brands today. So that's what we want to do. And we also, by the way, want to take at least 50% of these brands global. So you want to sort of use the distribution to do it. So in terms of what will it take to get us there? I think brand building has changed dramatically if you take the last 50 years. If you think about brand building, even 20 years earlier, distribution was the primary mode. You had a few SKUs, you actually pushed down the distribution funnel, and then you had a lot of ATL type marketing. And that's how you build brands. I think brands are now being built very differently. One, distribution is democratized with what Amazon is doing, with many of the platforms are doing. Second, I think brand building is now built around conversations and community, as opposed to sort of the high priestess of fashion sitting somewhere and telling you what this is. So it's a lot more driven by community and conversation. So how you build the brand is very different. And third, the mechanics of brand building are also very different operational, which is in terms of what you make, agility in what you make, lower order quantities, etc. So the way we think about it is, how can you create a technology operating system for brand building, right? And that's the core of what we're doing. That's what causes the acceleration. So to give you a couple of examples, we take the demand side. How do you sort of sense what you should make, whether it's in fashion or beauty? What are the demand signals that are available in social media and the marketplaces, in your own D2C website, that allow you to make a much more fact-based decision, right? That's one kind of thing. The second is, how do you know how much to make of something, right? The third is, how do you price it? Again, tech-led pricing, just given the volume price elasticity and the signals that are available. If you want to do it across 10,000 SKUs, you have to do it across in a tech-led manner. And then on the supply side, how do you actually change a little bit of how manufacturing operates today? Because India, by the way, unlike many other places, is also the source of manufacturing, if you take for textiles, as well as beauty and formulations and so on. So how do you transform the back end, and how do you make it more tech-enabled so that it can be more responsive and have less waste in the system, so you can deliver more value to your customers? So what we're trying to do is to build a tech-led operating system where you take every element of brand building and sort of transform it through technology, including brand building itself, which is, how do you actually build a community in a most cost-effective way, and how do you have conversations that are more authentic, right, around each of the brands? So that's what we're trying to do, and that's what I think will power. I mean, it's a 20-30x journey, right? And I think that's what's going to sort of power it between now and then.
Thank you, Shashank, Ajith, Ananth, and Alok. At the start of this conversation, I promised our audience that this panel will separate the real signals from all the noise around us today. And oh boy, all of you have delivered. You've really delivered. Love the candor, love the insights, love the conversation. I personally learned a ton from all of you today. And on behalf of Amazon, a big thank you.